Thank you. As many of you all know, our featured speaker here today was to be Greg Hale, who's the federal chair of the Federal Bank in Atlanta. Unfortunately, he had a family emergency. We're trying to work to reschedule his participation in this club's series of speakers. But today we are pleased, very pleased, to have stepping in for him Kathleen Kraninger, who's the president and CEO of the Florida Bankers Association. Kathy has graciously agreed to step in and move her participation. She was supposed to be next month's speaker to move up to today. The FBA is a trade association that supports Florida bankers through advocacy, education, and engagement. Kathy previously served as the director of the Consumer Financial Protection Bureau from December 2018 to January 2021. She has also served as a distinguished public sector career, and Bill Moore from Capital City Bank, our former club chair, will introduce her formally in just a few moments. I want to say, in regards to our next scheduled programs, please watch your email, of course, for the June meeting and the announcement there of who our June speaker will be. And our calendar for 2025, we're happy to report is complete, other than June. Please visit our website at theeconomicclub.com for the list of upcoming meetings and speakers. We're also looking forward to Jackie Benson, who we know on July the 17th will come before us. She's the corporate and investment banking head at Wells Fargo. She's going to join us in July. Let's see. At this time, I'd like to talk about our Economic Club sponsors. We have two sponsors today. They are Capital City Bank and Community Foundation of North Florida. Let's give them a round of applause. We really could not do this without the help of our sponsors who sponsor speakers every month. If you think that you have a sponsor or you would like to sponsor a speaker, please let us know, myself or any of the other board members in the room. We would love to talk to you more about that. It helps keep our dues low and it keeps this club going. So thank you to our sponsors again for their sponsorship of the club today. I would now like to recognize our trustee members who also are an important part of our club. Our trustee members provide additional funding above and beyond their dues to support the club each year. In return, our trustees receive exclusive benefits such as attending pre-luncheon receptions with our speakers and having an opportunity to speak with them in a small group setting. Our trustee members are also invited to attend other local events that we host from time to time. If you are a trustee at this time, I ask you to please stand and be recognized. All of our trustees, please. I've noted that we have several guests with us today, and I want to welcome each of you all to the Economic Club. And so we're going to ask all of our guests, if you're not a member of the club, when you're here as a guest, if you would stand and introduce yourself, or if you're the person who invited someone to be here, feel free. And I know we have a table full of bankers here supporting Kathy, so let me start over here. If you all, the guests, if you all will introduce yourself.
Yeah, Barry Blevins with Treasury at Common Bank.
Welcome. All right. Nat?
Nat Higgin with TC Federal Bank.
Anthony Marco with the Florida Bankers Association.
Sue Ellen Wilkins with the Florida Bankers Association.
Steve Lovack with Service First Bank. Will Davis with Centennial Bank.
Marlon Stack, Florida State University College of Law.
Awesome. Let me go to this table. Any guests at this table?
Ryan Graves, Primary United.
Thank you for being here.
So I'm going to introduce Lori Messer, if she's my guest. Lori is a history professor. She doesn't like to use that word. She instructs history at Tallahassee State College. And like all the good members who bring a guest, I Googled her to make sure I got exactly her background. And here's the very first thing that came up. I did not make this up. Lori Messer at Tallahassee State College. Mrs. Messer is by far the best professor I have ever had. She cares and tries to help students at every chance she gets. Lori Messer.
What an introduction. Back here at this table, Barney, do you have a guest?
And by the way, that evaluation was written by her husband, Joe. It's my pleasure. I invited a guest today, Patrick Slevin. He has his own PR firm called Slevin Sons.
Welcome. Welcome. Welcome, Terry. In the table in the back, are there guests?
I'd like to introduce you to Pablo Casado. He is our intern for the summer at Capital City Bank.
Welcome. Let me come to this table in the middle. Any guests?
Yes, I'd like to introduce Renee Longlegs. She is my colleague at Narrative Law.
Welcome. Welcome. And in the back there, do we have any guests there? Okay, moving to this table here. The one right here, is there any guests? Nope. Okay, over here. Okay.
My next door neighbor, Brian Newman, he's general counsel for Citizens Insurance.
Welcome. Welcome. Yes.
Hi there, Scott Winster Baker with Strategic Health Insurance Consultants.
Welcome. Welcome. And I don't see any guests here. Okay. Well, oh, I'm sorry. Please.
Well, this is my guest, Lauren Lee. He's a retired lawyer and a world traveler. He's also my walking partner at the gym. When you keep up.
All right. All right. Well,
I have a guest.
yes.
Amanda Beavis.
Hi, I'm Amanda Davis. I'm part of Retro Strategy.
Thank you. Welcome. Did I miss any guests? Any of our guests did I miss? Well, thank you all for being here. We don't. It's certainly a pleasure to have guests that join us every club, but I think you all are in for a real treat today to hear Kathleen Kraninger. And we hope that you all will consider membership in the club as well. If you want to find out about membership, you can contact any of our board members. Lisette, our executive director, is also someone that can help you with membership. And at this time, it's my pleasure to invite Bill Moore, president of Capital City Investments and Capital City Strategic Wealth, up to introduce our speaker for the hour. And thank you, Bill, for your leadership of the club. He's a former chairman and your continued support of this club. So, Bill Moore.
Thanks, Kenneth. Kathy, I haven't seen this many bankers in a room since our annual meeting. By the way, our annual meeting is coming up in June, so for those of you who are in the room, we would certainly welcome your attendance at our annual meeting. And there's former bankers in the room as well, I see. But Kathy, thank you for stepping in at the last minute. I thought Katrina was going to have a heart attack when she called me the other morning. I almost didn't answer the phone because I knew something was up. And anyway, it worked out, and we're glad you're here. You have in front of you a bio about Kathy, and when Katrina called me the second time and asked me to introduce Kathy, I thought, well, I know Kathy, so I'll be happy to do that. And then I read her bio, and I thought, well, I need to Google Kathy because, like Lo, who knows what's out there about Kathy that I don't know. There were things out there that I didn't know, so I'm going to share some of that with you as well. Don't worry, Kathy. I've only known Kathy a year and a half, just to tell you that I really don't know her that well. And when I met Kathy, it was actually in Miami for Alex Sanchez's retirement party. And I'd heard some things about Kathy from other bankers that were all good. And as a banker, we were all nervous about losing Alex as head of the Florida Bankers Association. Alex had been a tremendous voice for us in Washington. And I have had the pleasure of attending our fly-ins in Washington for a couple of decades, probably. And this year, when I attended with Kathy as the leader of Florida Bankers Association, I came back and I told Bill Smith, our chairman, and Tom Barron, our president at Capital City, I said, I feel a lot better. I feel a lot better. The Washington trip that I went on was probably one of the best Washington trips that I have been on. And the first day we meet with regulators. And, that's an exciting group of people. And Kathy really does very well with that. and she ran that first day just without a hitch, and just made me feel a lot better the second day when we meet with members of Congress, and every one of them must have been paid off because every one of them said something nice about Kathy and how well she represents Florida Bankers Association in Washington. So I could go into some of the stuff on Google, but really, Kathy is doing a great job as head of Florida Bankers Association, and I'm so glad that you're at the helm, and thank you again for stepping in. Kathy?
I'm glad he didn't share all of those things he learned from Google. Not really sure where that was going to go, Bill, so that would have been a challenging one. So good afternoon, everyone. It is truly a pleasure to be here. I have really some reflections on my time in Washington to share. So I'm going to start with a quote that I'm sure will pique your interest. Embrace the chaos. In chaos, there is opportunity. The context for that quote is not actually what happened this week with respect to the Economic Club speaker and having to pitch in here last minute, despite what we've already heard from Kenneth and how Katrina may have been feeling a couple days ago. And certainly our thoughts are with Greg and his family. And also as someone who does do a lot of event planning, you know there is a lot of chaos involved with a last minute change or cancellation by a speaker. But actually, those are the words that I heard from a longtime friend in the hallway in the Eisenhower Executive Office building in February 2017. And I had landed my dream job at the Office of Management and Budget. And so this may prompt some questions from some of you. Was there chaos in the Trump White House? I'm sure you're just hearing the shock from all of you on that. But why was my dream job at the Office of Management and Budget? It sounds like one of the more dry places you could serve in government. But before I get to the answers of those questions, let me at least tell you what I'm going to talk about a little bit today so you have that frame of reference. With a backdrop of 25 years experience in Washington, D.C., I want to talk to you a little bit about really government transformation, DOGE, what's happening right now, the size and scope of the government, and the importance of the president's deregulatory agenda to us. And beyond that, some things about the future, frankly, and innovation. So Bill and I talked a little bit about the competitive landscape for banking. Of course, I'm happy to talk a lot about banking, so I hope you've got questions on that too. But there are some pretty big things happening in the world around innovation that are affecting all of us. So embrace the chaos. In February 2017, I joined OMB as what was called a PAD. So it was a Program Associate Director, which of course means absolutely nothing to anyone outside of Washington. But in Washington, people do know and fear the PADs. Basically, the PADs divide all of government amongst the five of us. At the time, there were five. They since have three people actually doing the job I did. I was the PAD for general government, which meant that I was responsible for overseeing, with really an incredible staff of 60 people at OMB, overseeing HUD, Treasury, Justice, Transportation, Commerce, Homeland Security, SBA, and every single related independent agency, small agency in that realm. And that's a fifth of the government, basically. And in terms of employee base and the civilian side, it's pretty substantial. You didn't hear defense or healthcare in there or the VA, all of which are pretty massive apparatuses. But it was a huge swath of government activity. And the great thing about OMB is that it's a microcosm of the government. You take what is the entire government, and we'll get into how massive that is, but put it in an agency at the time of 400 people. And so you've got 400 people whose job it is to actually try to think about how do we streamline, make more effective, make more efficient, cut, spend on the president's priorities, everything about where execution and budget and effectiveness and programs comes together in OMB. I had been involved in government transformation since September 11th. So I was at the Department of Transportation on 9/11. and the stand-up of TSA, the stand-up of the Department of Homeland Security, I was involved in very extensively. And I came to truly appreciate the role that OMB played in that whole process. It was always, frankly, from my vantage point, and I'm biased, obviously, because you've already heard I love the agency, but it was that person either at the table or in the back bench that when they spoke, it was pretty rare, but everyone listened because they held the purse strings, and you had to pay very close attention to anything that OMB was telling you, and any question they would ask, and you responded very quickly to anything they said. So I had truly grown to appreciate their role in the process in general. And then also, while I had never worked in a White House, because of the experiences I had and the roles I had, I was at the White House 3 or 4 days a week, meetings that were endless. You have policy processes that involve every department and agency that has a relevant role, every White House office that has a relevant role, and they were called, policy committee meetings. And so you've got all this process around how you can get decisions to the president's desk. And of course, in most, and certainly in my experience, I won't talk about most White Houses, but in my experience with 3 of them prior, you had everyone at the table. Every argument had to be finely tuned, and every dynamic from what it's going to cost to how many people it was going to take to what the political implications were of any policy program idea you had. Before it got to the president's desk, it was finely honed to what decision the president needed to make and every aspect that could possibly come into play in terms of how you would hope he, and of course it has always been a he would make that decision. And that is really the backdrop I had when I walked into the White House in February 2017. A policy process that I knew I was going to be a big player in. I was super excited about it. It was going to be fantastic. I knew exactly how a White House is supposed to operate. And of course, as you can imagine, that is definitely not the way the Trump White House operated. So it was a very rude awakening. And I will say, as I said, my friend who was at the NEC just looked at me with that one piece of advice and said, embrace the chaos. And it was a good pause moment for, what do I want to achieve in this? Where am I going to come out? And absolutely forefront in my mind always is support the president's agenda and the president's policy. The president is why we're there. Get into that too, because I am a believer in the unitary executive. So you should have actually everyone reporting to the president. And so that is front and center. At the same time, you want to also protect good decision making. I'm a believer in that. Actually getting the aspects that are coming into play and not just presenting the position I have, but actually telling the other side of the story, why I might disagree, but as a staffer, a good staffer, and even a good executive who appreciates good staffers, I feel like that's part of the job too. You've got to present that picture and understand where the barriers may be, where the opposition might be, and how you address and counter that. So that's kind of what that process was about. And I'm a firm believer in process, as folks on my team would know. I think it's important. I'm a lawyer. So of course, again, a good process is important. But that is absolutely, as I said, not the way a businessman thinks and not the way the president was going to run that White House. And so that was, again, a fantastic opportunity to step back and say, okay, how do I fit into this? How do I adapt? How do we get those issues that I think are important to decision making into the process? And so it was with that, and with the leadership of Mick Mulvaney, who was the Office of Management Director at the time and then became Chief of Staff, Russ Vogt, who was the deputy, who is actually now the head of OMB. We had a lot of conversations inside OMB as to how to most effectively get that message across. And also because, again, budget's in the name, the opportunity to try to streamline the federal government, to try to actually spend less was important. So all of that to tell you that the FY18 budget request that we submitted while I was at OMB was the last budget, President's budget submitted, and we did it with a straight face. Admittedly, many of the Democrats in Congress and some Republicans didn't think what I'm about to say was true, but we submitted the last budget to Congress that actually with a straight face could balance the budget and provide a balanced budget within the 10-year window. And that is impossible now. For those of you that follow this very closely, and we'll get into why. But also, we introduced a huge government reform and reorganization proposal in 2018 that was just reimagining government. So that is a bit of a backdrop on, the size and scope of government, what I have done in my career in at least one particular facet of it in thinking about this. So how did we get here? 2.4 million civilian employees, add postal workers, add over 1 million active duty military personnel, double that because you've got double that in terms of the number of federal contractors, $7 trillion in spending, most of that, of course, mandatory programs. Then you get to interest on the debt, which has now exceeded defense costs, defense, and the rest of discretionary. And so that's the second Trump administration coming in the door now. There thankfully is a better focus on recognizing that this has gotten too big. There are a lot of reasons as to how we've gotten here and a lot of things about how we can address it. But I will say, at least talking a little bit about what's happening right now in this administration, the president really put forward the Department of Government Efficiency as the poster child for this issue area and this set of challenges and looking at how we streamline. I will say I'm very glad to be in the seat I'm in now. I'm not the grenade thrower in my career, as you probably also heard of my love of process. But there is certainly an argument to be had that at this stage of the game, that may be the only way that you can actually fundamentally make change. And that's the challenge that's here now. I think the efforts of Elon Musk, again, you may think about it in a positive way or not a positive way. I know there are a lot of different views in this room and clearly views in Washington. But I do think that the arguments that are there, I was Googling also this week talking about this topic. Brookings did a big, government's too big report in January. So this whole conversation has started moving. You've got both sides of the aisle. Every Democrat we talk to, because we do have Democrats in our delegation as well, we know. We work with both sides of the aisle. The Democrats in the Florida delegation are absolutely talking about this, and many are members of the Doge caucus, or at least were in the beginning, and now it's gotten to be a little more political than it was when it was first being talked about. But the opportunities to streamline, what the size and scope of government actually is significant. And you get back to things like USAID, education, and then the CFPB, which I can talk about with a lot of expertise and which affects the banking industry. So just the proliferation of and the structure of the independent agencies and whether or not and how they report into the president. It was a subject of a Supreme Court decision, of course, when I was the director of the CFPB in Sailor Law. It continues to be a discussion point, but we really do have a pretty massive apparatus of again, arguably things that all sound good in and of themselves, but what is that getting us to in terms of the large scope of the government size now and what it should do? And so that is something I wanted to talk about a little bit, the experience at the CFPB as well, because it demonstrates all of this, again, in just a smaller form from an agency perspective. So in 2018, I left the Office of Management and Budget. The president had nominated me, and I was confirmed, unfortunately, on a party line vote. It was not my wish as a former Senate staffer and someone who had a lot of relationships with Democrats and did and continue to, which are important to me, I think. Fundamental always, as I said, to hear both sides of the arguments. That was how I entered. An agency that is sounding like, again, if you listen to the rhetoric, a lot of politicized staff, people who are motivated by perhaps not what the director wants, regardless of who the director is. I did not find that, I can tell you. I mean, I did find, for the most part, dedicated staff who are doing, for the most part, exactly what they've been told to do, what the director told them to do, and what the mission is. And so I will at least say that with respect to federal employees, that's the bulk of the federal workforce, for sure. And so they are getting caught up in something that is bigger than them. But that's also, again, how do you deal with this and take this forward, recognizing that? But it also, though, has become a very challenging place. I tried very hard to work in a bipartisan fashion while I was the director of the CFPB. While the statute is in place, the mission is clear, and taking that forward. But there was very little appetite on the Democrat side, particularly led by Senator Warren. Everything the CFPB did, exactly the way it had done it, under Democrat leadership, was perfect. And then you had the Republican side of this, and there were many that did work with me, but we actually never got any changes into law, even with Republican leadership and in the House at the time and in the Senate at the time. We didn't get any changes in the law to improve upon, and recognize things that the CFPB maybe should do in protection of consumers in the financial marketplace. So we tried a few things, one around military lending, clarity around the ability of the CFPB to examine institutions that were doing military lending, which I argued they did not have the authority to do. So again, very minor thing. If you are thinking about and concerned about the military in that space, you have the opportunity to examine them just like you would examine for any other lending type. But that is not something that Congress, again, with Republican leadership, was able to get across the threshold. So that's just a small example of things where you say, okay, if we can't come together on, things like that, where are we going to be with the larger mission of the agency? And so we have a situation now between DOJ and really it's the CFPB acting director, Russ Vought, making decisions about what that agency really needs to do under the law and what that takes in terms of budget and personnel. So what was a 1,700 person agency at the time that Russ Vought took over was a 1,500 person agency at the time I left, and had aims to get larger, because things do just have a tendency to get larger, and an agency that was funded out of the appropriations process that Congress has nothing to do with. Again, you get to an independent agency that has the ability to self-fund. I wrote a letter to Jay Powell and I said, here's my funding need for this quarter. Thank you very much. And the money would transfer, and that is how it operates. While there is a ceiling in law, it's not a ceiling that's at all meaningful. And Director Chopra, who preceded Russ Vought, his plan was to grow to well over 2,000 people. And again, he had every ability to do that. So you get back to where are the controls in any of these processes? The need for agencies to report to the president, for OMB to review the budget of those agencies. We did include the CFPB in our federal budget because it's part of the federal budget in terms of understanding the totality of government spending. But it didn't actually cost us anything, and it wasn't anything that would get a lot of attention or focus. And the director of the CFPB could actually ignore the president's budget if they wanted to and ask for money from the Federal Reserve, totally separate from and apart from and outside the whole budget process. So that is, again, that's this whole nature of how do these agencies come about. Congress created it. I mean, it was with Democratic Party rule of both sides of the House and Senate and the presidency, but they created an agency that really is not accountable in the way standard agencies are. And it is unique in many ways, and some of that has changed in the law. But there are a number of agencies that have similar mechanisms or are funded by users. You look at the prudential regulators in banking as well. A lot of their activities are funded by fees and funds from the entities that they regulate. Energy too, it's not an unusual mechanism. And user fees make sense. I worked at the Department of Transportation in the beginning as well. So there is definitely, I think, an inclination for user fees. But we've lost the transparency or any kind of thread that ties together how these things are funded, why they're funded the way they are, and where there's the opportunity to even address that, change that, tweak that. So I would come back to the dynamic right now, as I see it, as you think about the size and scope of government, is you do have a massive clash happening. You clearly have an administration that has taken things that are not politically popular on the Republican side and said, we're going to strangle them as much as we possibly can to the degree that we believe we can under the law. And obviously there are judges challenging that. but they're going to do it as far as they can. The CFPB is a great example because, according to the acting director vote, 200 people is basically what it would take to run the full mandate of the agency. So you've got 1,500 people who are in and out of whether or not they have a job right now, but 200 people is what it takes. That's what he's decided to execute the law. And there's no one who could say anything about it, frankly, until there's a different director. Then that different director has the opportunity to say something about it. Congress does have the ability to say something about it, just as it does any of these other things. Anytime a new agency is created, anytime you think about the things that we're proposing in terms of advocating for change in the law, sure, Congress can do it. But where is Congress's will to actually address any of the things that we often bring and their ability to move legislation that is perhaps not the most urgent or on fire, or it gets to some of these big transformations we want to see happen. So that is, my perspective, and I got more theoretical than I meant to in terms of hypothetical things, but we really do have a responsibility to hold Congress accountable to change the law. The whipsaw of the CFPB, the impact that is having on institutions that are regulated by it, the cost that means for an uncertainty that means for consumers in the marketplace, there's some real issues here. And that's, as I said, just one tiny little part of the federal budget that I just outlined in terms of thinking about what should happen there. And then we take it to Tallahassee, too. We've got a state that hasn't passed a budget yet, and a state that is going to be dramatically impacted by the things that DOJ may or may not be successful on. So how does that reduction in what happens from the federal government in any of these arenas, whether it's consumer protection or transportation investments? We're talking a lot about air traffic control these days, too. Again, a system I know pretty well. Where does all of this fit in? What's a federal role? What's a state role? What's a private sector role? And how do we think about the size and scope of government? The other thing I wanted to talk about clearly is the regulatory environment, too. OMB does have a piece of regulation in OIRA. And so OIRA really is the White House's apparatus to process every single regulation that comes out of agencies that actually do report to the president. As I said, lots of independent agencies whose rules in the past have not come through OMB. President Trump did issue executive orders to try to get every single regulation that is produced across the government through OMB and through that process, but not clear whether that's all going to shake out or how it is. When you have cooperative appointees that you put in place, ostensibly that will happen. But the president has set an agenda that is incredibly aggressive. I think, again, that along the lines of many of the things that he's done, he has actually advocated for the rescission of or removal of 10 regulations for every new regulation. So you talk about the opportunity and the challenge that presents in terms of looking at this regulation by regulation by regulation. Again, I could talk about what's happening in the banking sector from the deregulatory agenda and in the CFPB space. They are doing a lot of things incredibly fast, and I am hopeful, certainly, that we will get this as some lasting change. And that's, I think, the other dynamic is, how will this all play out? But one of the mechanisms that had been used, as you can imagine, for particularly a conservative industry like banking, to sue its regulators is a pretty big deal. And so we actually, in the past 4 years, have used the courts as a means to address some of the overregulation that was happening in banking that we thought was detrimental, not just to our businesses, because it is what it is on that front, but really to the customers, to the services that we can provide, frankly, to the purpose. I think a lot of regulation, you have a noble purpose to it. Say the banking industry is subject to Community Reinvestment Act. Of course, a bank invests in its community. That's the purpose of an opportunity to work with customers, to promote that community, to build the well-being of that community. So there's more business in that community, of course, and then there's more business for the bank. So and good companies, I believe, I do believe this too. Good companies actually do, consider their reputation, how things impact their customers. So that Community Reinvestment Act has a noble purpose. It has become a paper tiger. It has become something to wield over banks in terms of holding up mergers and acquisitions and holding up things that are actually positive for the community and positive for customers, and slows down the banks. It has become the dynamic where you've got, instead of actually having more lenders, you've got more compliance people in the bank than you have lenders. And what are they doing? They're literally going through checkbox sheets to make the regulators happy so that the regulators' boxes are checked. Is that the industry we want? Is that the attitude we want in terms of where we should put our investment? Or do we want that money going into the community, as I said, going into lending, going into actual economic activity, as opposed to going into compliance? And so there were a lot of things that the banking industry said, you know what, this is getting to be kind of ridiculous. 7 lawsuits that involve state banking associations, the American Bankers Association, Independent Community Bankers Association, and bankers in general. Several of those were against the CFPB. So the CFPB in this administration, under acting director vote, has gone to court and actually asked the court to rescind rules. So what is generally a longer administrative process and having to pull those rules back, certainly I know they'll get sued for rescinding some of these rules and for some of these agreements, but that is actually the posture they've taken. So rather than taking the administrative action to undo some of the rulemaking, they've asked the courts to rescind it. There have been several Congressional Review Act actions against CFPB rules. And so again, you talk about I think, substantially better outcome for consumers, for banking and bank customers, and for our communities in this arena, in this litigation. However, again, without Congress acting, without Congress saying this is the mission and role of the CFPB, these are the bounds where the CFPB should operate, and this is the way we want to fund it and have it operate, we're left with with things that can more easily, again, be reversed, things that can be reimposed. And that's the, I think the challenge that we have with the moment right now. We're, 150 days, 120 days into this administration at this point. So the 4 years, there's a lot of opportunity. But I would say Congress needs to actually enact things that are going to make the change much more lasting for those of us who would like to see some stability and some certainty. And certainly from the banking industry standpoint, it is not no regulation. There is a real role and importance for regulation. However, you've gotten to a point where it is just over the top and it's crushing and strangling the very industry that's trying to, again, build up our communities and support our customers. So the last thing, as I said, I was going to talk about was really the innovation space. And I think it's, again, flows pretty naturally from what I just said. The U.S. has been a leader, obviously, and you think about the internet era and financial services and what the changes we have seen in just the last century, the last 50 years, the last 30 years, the last 20 years, in terms of how people expect to interact with technology, what services they can have, and even, I suppose, a lack of appreciation for how fast that moves, and therefore regulation not anywhere near keeping up with it. So as I said, Bill mentioned to me the competitive landscape that banks are facing in particular in this arena is an interesting one. The last job I had before I was at the FBA was for a compliance software company in crypto. So I was there 2 years. I spent 2 years traveling the globe talking to regulators about how we should regulate these markets. Of course, it was also related to having a software that tried to prevent, manipulation and things that were happening in those markets. But it is an innovation that, unfortunately, in the last administration, from my standpoint, and from many standpoints, that they were happy to just see leave the United States, and not appreciating that if we start pushing what is the future of finance, what is the future of internet, future of opportunity for companies, innovation, change here, we're not actually stopping people from accessing that, as you well know. I mean, we've seen how much activity you can hide where you can hide your location, and there are obviously technologies also that are working to counter that. But the opportunity to say, hey, we're just going to close off the United States from that type of financial activity is really, frankly, it's impossible, it's short-sighted, and I believe pretty detrimental. Maintaining the U.S.'s dominance, frankly, in the global economy and our leadership in the global economy is pretty important to our national security and to our well-being and to really where we are as a country. So that is where I come from on this space too. I think it is a massive challenge to banking, though. Again, we come into this current time period out of what has been pretty heavy regulatory winds and dynamics, and probably some complacency too. I mean, if we're being honest with ourselves, you're spending your time and focus answering that mail on what is required of you regulatorily. Risk, in fact, from the regulators, it was very clear. No partnerships with fintechs because they're too risky. Everything was reputational risk. So therefore, you've got all of that pressure. Why are we spending time innovating? Yet you have consumers who are having these experiences online with apps. You've got a whole generation of people that would rather look at their phones than look at the banker across the table from them. How do we navigate and think about this? How do we bring this into play? And how do we get a lot of that bureaucracy that is in the way, whether it's delays that we say are fraud related, and some of it is trying to stop fraud, but the fraud's happening anyway. So how do we get to a much more efficient system? And I will say that the arena of blockchain technology is an opportunity, but it has to be one that is put on a level playing field too. Because the last thing I'll say, and as I said, I was looking to see whether I could fit it in, Bill, but talking about the competitive landscape more widely, crypto is really just one piece of this, but banking has been experiencing a lot of dynamics in terms of thinking about PayPal and Venmo, Amazon and X. We've got dynamics with hard money lenders that are operating outside of banking, and they're private entities that are actually lending money because they can process faster, because it can take a long time actually to process a loan in a bank, because again, you've got all of the requirements that are regulatory and some that are appropriate in terms of risk management to assess that loan. But you've got other service providers out there who will say, I can do it for you faster, and this is how I can do it, and yes, it's going to cost you more, but we know time is money, and therefore people are going to make those decisions today to get to that place and try to move something faster in a sense of urgency. So we have a dynamic where we've got a lot of different players that are eating the most kind of profitable parts, frankly, of the banking sector right now. But at its heart, we have a model of taking in deposits and making loans. And it's fairly simple, again, from that standpoint. But if there are no deposits coming in to the banks, then they can't make loans. And when we've got that deposits going elsewhere, whether it's payment stable coins, as the Senate is looking at it right now, or whether it is that credit unions are not actually treated the same from a tax standpoint as banks are, as many of you in the room know, and certainly Tax Watch folks helped us do a lot of research around that, so thank you to you all. That is a dynamic that is not a level playing field. And so we want to compete, we want to innovate, we want to be part of this global economy and everything that's coming at us. But there are a lot of headwinds that we are hopeful, at least, that the administration is going to look at and support, and that we can address going forward together. So hopefully that was a little bit of interesting tidbits, things to think about from that standpoint. Happy to hear any questions that you all have, and we've got a little bit of time at least to do that. But yeah, Jeff, please. And I think Kenneth, either you're facilitating or facilitate myself. I'm happy to.
You have to be a member of the club staff.
Oh, good, okay.
Thank you, Kathy. Excellent presentation.
Here's the microphone.
Yeah.
Really appreciate you. Great presentation. It's fascinating when you hear the inside track of what goes down in DC. So based on all your experience and kind of the environment we're in, what do you predict will be the 2 or 3 biggest changes we'll see in banking in the next 10 years or so?
I do think what happens with respect to crypto is going to be a pretty big change and a big, so that's probably the top of my list in terms of innovations. I am a real believer, frankly, in blockchain technology. I'm also a believer in public blockchains. The banking industry did some interesting things in recent years as I was on the other side of it, because on the one hand, particularly the largest banks, who are also members of FBA, and I have a lot of good relationships there. But they were on the one hand saying exactly what the regulators wanted them to. This is bad. Yes, we need. It's all out of control. And on the other hand, they were investing in private blockchains. So I think we have to think about what it means to democratize this. We've got populist trends in this country too, and we've got to be focusing on transparency, thinking about things that are going to really bring everyone along in society today. And so I think there is an opportunity with public blockchains that can do a lot on that front. It's got to have some guardrails, but how that actually shakes out, I think, is a big dynamic. I do think too, I hope that and I'll call it smart regulation, because that's always what I've called it. Actually, it always pains me a little bit to talk about deregulation, but I think in the current environment, it's absolutely necessary, which is why I keep using the term. But I hope into the future that this doesn't keep becoming a pendulum swinging. So I'll put the optimistic hat on and say that a lot of this deregulation will hold, and we'll be thinking about, again, the banks as the safer place for where you should be putting your money and the opportunity for where you should be putting your money, and at least using that as a base when you take advantage of a lot of the other things and other service providers that are in the space and that we're hoping to have level field competition with. So I guess those are a couple. I guess your top three. The other thing I would say is, and the digital asset space absolutely puts this on steroids, it's the line between commerce and finance. And lawyers will certainly know this well. It is a pretty murky line. It has become a pretty murky line. But in Washington, there is still a pretense that there is a distinction between those things in terms of how they're regulated. And I think we've got some big decisions to make about how technology should or should not be regulated going forward, and banking needs to match that, in my opinion. And so this notion that we're going to, totally grip down on the banks and tell them everything they need to be and turn them into utility, and on the other hand, let tech kind of run rampant, that is not a recipe for our success economically. So a push for something that's more rational that thinks about that is key, in my opinion.
Hi, Ben Graybar, Southern Wealth, former banker, commercial lender. And my question is, I just came from a conference where we listened to, for example, the head of Blue Owl and some other middle market and small cap type lenders that are taking over private loans for some of the reasons you mentioned. And it's really mushroomed, obviously, since the 2008-2009 time period. And my question is, where do we see this going? Because they're growing so quickly and expanding so much, and there's got to be a crossover point where it either becomes a regulatory issue or, how does it even get regulated going forward?
Now, I will tell you that one, I think particularly given the current bend of the administration and the dynamic, regulation is probably not what's coming, but definitely the prudential regulators are thinking about it and trying to figure it out, but they know where the administration's coming down. I think the answer is actually on the other side of this, and it really is making the economics of banking make sense. We had a hearing last week in front of House Financial Services. 2 Florida bankers testified, and it was about de novo formation, M&A, but the economics of banking. It pains me to say this, but investing in a bank is often a passion thing for many of the investors, because the way you can make money is definitely looking at some of the private lending arena. And so we've got to make the economics make sense. These are businesses, and they should be businesses. And so that's I think, the opportunity perhaps that I'd like to at least see put forward, and that I think will appeal to this administration and at least the current Congress is really making that make sense, which is, stemming back some of the regulatory requirements, really thinking about the way to best make it make sense to actually invest in banking.
Kathy, thank you very much for holding your presentation, but you for pivoting and helping Katrina and Kenneth and the club here. Could you talk for just a couple minutes about the role and increasing value that community banks have to offer across the state, because the unique difference between what they have to offer and kind of the blend between them and, credit unions, if you will, and their ability to respond to market forces in the community at large. Thanks.
Now, I think one of the biggest surprises I had coming into this job, I'd been a regulator of banks, 10 billion and above. I'd been in Washington a long time, certainly looking at this. Credit unions, 10 billion and above too, in assets. And so coming here, I thought I kind of understood what a community bank is. In the state of Florida, and it is a growing trend across the country, but we, I think, led the way. Our community banks are not consumer banks anymore. They're not retail banks. They're small business commercial banks. That's largely what they are. And so that was eye-opening to me, and part of what drove that trend in this state and in some of the others is the challenge of competing with credit unions that can just offer better rates. The biggest reason is the tax differential, which of course you all have researched well, Dominic. But we got that that argument is not winning the day. I mean, at the end of the day, politicians want to see consumers have lots of options and want to have the low cost. And so again, coming to why that is exactly, I mean, we'd like to be doing that too. That's one of the reasons why you've got banking that really moved into the small business sector being pushed out of that, pushed out of mortgage lending too. I mean, mortgages have become fairly commoditized in terms of the way they're operating, and it's fairly pro forma. But the small business space is still a very relationship lending, based structure. You've got so many unique features to what a small business actually needs, and even frankly what a small business is. Because, by the way, there are many different definitions in statute and regulation about what a small business is. So how we think about that's a big part of the, I guess, the value proposition of community banks is understanding that community, understanding what the small business needs are. And one of the threats is, again, regulatory. Trying to commoditize that product is what a lot of folks in Washington were trying to do. And so that has now a threat in terms of one of the CFPB rules that is statutory mandate on small business lending, data requirements, and having to try to fit every small business conversation you're having in terms of products and services you offer them into a little box that you can report on, to the CFPB. But that's definitely the big value proposition as I've heard it and seen it, and a lot of different things that we're trying very hard to make sure that that's still an option. And a viable one.
We're going to take one more question.
And then we're done.
Then we're done.
Thank you, Kathy, for your insights today. We really appreciate it. I've got two questions, two-part question. Number one, thankfully, it seems that the financial industry is retrenching from investments in China. And I wanted to get your thinking on that because I never understood really why we should be helping China to begin with. I know that we are economically intertwined, but their economic data is opaque. The judicial system sucks, and on Z can make a decision. So wanted to get your thoughts about that. Second question is, I understand and appreciate the oppressive regulatory environment that banks have to go. There's been some talk in the administration about stepping back from some of those regulations. How stable and solid do you think the banking industry is in America and in Florida? And has regulation helped that, inhibited that, or has it encouraged that?
Yeah, I can take that one first for sure, then come back to China. But I mean, from my standpoint, there's, and I think the research shows it, and I can obviously point you to things, but to say briefly, the last 15 years have definitely gone overboard. And fundamentally, it's really about tailoring. I won't stand in front of you and argue that the largest banks didn't need some changes after the financial crisis and as a result of it, but it went way too far to one end in terms of what the cost of that is. And frankly, again, government ends up in a paper tiger situation. So all it is checkbox exercises that mean more compliance and less economic activity. And the utility of it, did it actually make us safer and more sound? Some things certainly did. I mean, in terms of capital requirements and liquidity requirements, but the banks are solid. I mean, we have incredibly safe and sound, well-capitalized banks in this country. And now it's, again, the opportunity to say, where should this give? And where should we go from here? So I think it has been, a lot of things you can say we learned, but that is one of them. And then the repercussions of what happens to all of the things that banking did as a result of that regulation is being pushed out of banking. So our consumers and our customers more safe if they're going to every other service outside of the bank. That's a repercussion of this. On China, look, I am still probably one of those old school Republicans, so I tend to believe in free trade, and I believe in open markets, and I believe that's how we have changed the world and in many ways sold the world on American values and the things that we benefit from and enjoy in this country. So I think obviously the perspective on China has changed in terms of when those investments were being even pushed by the federal government. I mean, you talk about federal policy pushing a lot of companies to do things in where they're investing and where their activity is. I think there is a appropriate, relook at that and a different risk calculus today than there was then. Also say you could argue from an IP standpoint, what America lost in terms of that push to engage with China and what they gained has been significant as well. So I certainly welcome, looking at that, but I don't think isolationism is an answer.
Let's welcome Kathy. I do, Kathy, hold on, don't go anywhere. I do have a token of it, and we know you're not Gregory Hale, but yours will be coming, and I'll personally deliver it to you, like I said. But we will have this token of appreciation to you. Yours will be coming, but we thank you again for joining us today. Thank you. Okay, watch your email for the June meeting. Visitors, please join the club. If you'll get great presentations like the one you heard today. And we're adjourned. Thank you all.